Well, that was quite the turnaround. After Wednesday's sell-off, Wall Street came roaring back yesterday, and once again, big tech was the main reason. Hey everyone, it's Friday morning, July 31st, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in, today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. All right, let's get started. U.S. stocks rebounded sharply despite plenty of reasons to stay cautious. Investors largely shrugged off renewed U.S. strikes on Iranian targets, rising treasury yields, and lingering concerns about artificial intelligence spending. The Dow Jones gained nearly 1.2%. The Standard & Poor's 500 climbed 1.7%, and the Nasdaq surged more than 2.8%, helped by a strong rally in semiconductor stocks. The biggest winner by far was Microsoft. The company delivered outstanding earnings, and its Azure cloud business generated more than $100 billion in annual revenue for the first time. Investors loved the numbers, sending the stock up more than 15%, its biggest one-day gain since 2008. Meta told a very different story. The company disappointed investors, and concerns about whether massive AI investments will ultimately pay off pushed the stock sharply lower. After the closing bell, it was Amazon's turn, and the company did not disappoint. Revenue grew 20%. Amazon Web Services expanded by almost 37%, and profits more than tripled compared with a year ago. Management also highlighted exceptionally strong demand for artificial intelligence services, sending the stock higher in after-hours trading. On the macro side, investors continued digesting the Federal Reserve's decision to leave interest rates unchanged. Fresh inflation data showed price pressures eased further in June, although the U.S. economy also expanded more slowly than expected during the second quarter. Meanwhile, long-term Treasury yields remained near multi-decade highs, reminding investors that the bond market is still flashing warning signs. All right, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. See you tomorrow morning.